It's been a bumpy ride for Tesla over the last year as the EV automaker deals with increased competition and softening demand. Shares have fallen roughly 30% in 2024, and first quarter deliveries came in far below even the most bearish estimates. As Elon Musk and co try to navigate the company through choppy growth waves, will investors' patience chart the same course? Well, here with me to talk Tesla and break things down is IBD news editor Ed Carson. All right, Ed. So, a lot of the discussion right now around those Q1 delivery numbers. Tesla delivered just about north of 385,000 vehicles in quarter one. That number was down sharply from Q4 in 2023, even with those price cuts. So, what contributed to this poor showing for Tesla?
I mean, there are some short-term things that happen. There in the first quarter is usually fairly weak in China. And while Tesla has a lot of other sales, that still contributed. The Model 3, they upgraded the Model 3 at the Fremont plant. So, but that really had trouble. Tesla sometimes has trouble doing these modest upgrades to vehicles, especially at the Fremont plant. And so that may have caused 20, 30,000 in sales to go. There were also some disruptions to Berlin, though there seems to have been enough Model Y supply that may not have had much of an impact, even though Tesla sort of alluded to that. But the bigger problem is that there seems to be softening demand in EVs, or at least at the very least, a lot softer than people expect. And we've seen a lot of companies scale back their EV issues. And the thing is, Tesla only sells all electric vehicles, so they can't like shift to something else. Though a lot of its models are aging, despite some little tweaks there, the Cybertruck really isn't that much of a factor. So, you have aging models. There's a lot of competition, especially in China, some slackening demand overall. Maybe you could argue in the US and Europe, there's the Elon Musk effect is becoming somewhat of a negative. So those are all factors. So some of those factors may fade, like the Model 3 may get it better in Q2, and the Cybertruck will pick up presumably a little bit, but there's a lot of other factors on the weaker demand, and maybe aging models aren't necessarily going to get better, going forward.
Now, Dan Ives, who is a noted Tesla bull, he called these Q1 delivery figures an unmitigated disaster for Tesla in one of his investor notes, but he still remains bullish on the company for the long term. So, what is the bull case here for Tesla, and what are some of the growth prospects?
I mean, the growth prospects are becoming more and more concentrated on things like full self-driving and AI and robotics. I mean, on the EV side, there's the Cybertruck, which supposedly, like Elon Musk said, isn't going to be cash flow positive. Well, maybe if it gets ironed out and the production picks up, and if demand stays strong beyond the very limited thing, maybe that can do well. There's been a lot of hope for a small EV, and I'll talk a little bit more of that later. That's really in flux. That would be something to expand the growth market. And the only other thing that's really out there is maybe upgrading the Model Y, and that's their biggest vehicle. I mean, this is by some measures the world's best-selling vehicle. So, they want to make sure they upgrade that. The Model 3 upgrade didn't seem to have much of an impact on demand, really seems to be concentrated on full self-driving. And if anything, Elon Musk and Tesla seem to be, doubling down on that. And like this is what the bet is. If you're bullish on Tesla, it's more about these what moonshots, which might pay off enormously or may not pay it off at all.
And how realistic is that bet? Because I feel like we've heard over the years that full self-driving, level 4, level 5 is just around the corner. I feel like there's been a lot of promises, and yet here we are still waiting. So, what is the timeline here looking like?
That's always hard to say. I mean, Elon Musk, famously has basically said every year that this year I expect to achieve that. And the dream of Tesla's full self-driving, and what the genius of it is, the idea is that if it's vision only with a few cameras, it's relatively cheap. They're not spending that much money on it. I mean, or at least not on the car, as opposed to these, you look at Waymo or others, those are expensive vehicles when you have all that stuff and it takes a lot to maintain it. So if Tesla could achieve level 4, even if there's some other competing products, Tesla might be just so much cheaper than them. So that's the dream. There was reports that maybe this version 12 of beta maybe show improvement. They still seem to be a long way away. And even if they got to a point where you think, you know what, we really are close, and I don't know what that might be. Some will say 6 months, some will say 6 years, some will say never. But if they get to that point, probably in a lot of places, especially their core markets like California, they'll need to get regulators, cities to approve it. They'll need to have years of testing. So it seems like it's years away. Now, maybe you can just make that bet. It's sort of like a biotech or other things. I'm betting that years down the road, but that's sort of what the argument is. And so how real, it doesn't seem realistic that it will be happening in the next couple of years. So we'll see, like that, if that ever comes up. That's the bet. That's the bet that FSD will become truly full self-driving.
And then what about plans for a robo-taxi?
Well, that's the thing, is that Elon Musk has come out on saying, well, that we are going to have a robo-taxi event. And he might have surprised his own team. Now, that was sort of in response to a Reuters report that said Tesla's shelving a small EV for the masses to prioritize the robotaxi. And Elon Musk said they were lying, but didn't specify. And in a way, you could almost argue he was confirming the Reuters story. But we don't know. It's like, it sounds like, at times he has wanted to push for a robotaxi, a vehicle without a wheel. I mean, without a steering wheel. So you and I literally couldn't drive. If the technology, though, if the software isn't there, it's not clear what you're going to be showing. It's sort of like, if you can't actually drive it, then it doesn't have much use. So maybe something they show off, and this is what we will produce, but then they'll need the software to be upgraded. So I don't know what's going to happen. Look, I think there's going to be a lot of questions on the first quarter earnings call. I think there'll be a lot of questions. Well, what actually are you going to do, and what does that mean? Showing that vehicle.
Now, you mentioned possible plans for a smaller vehicle. So do we know any more details there?
No, we don't know really anything. There's been a lot of speculation that the robotaxi may essentially be on the same platform as the small EV, and I don't know how similar they might be designed and differently in the inside, but there's just been questions about when that might happen. I mean, they've never shown images of it. They've never shown a prototype. It could be that in the US that batteries aren't really available. Right now, the Model 3 doesn't have IRA compliant batteries, which means the Model 3, at least the versions that they have, don't have the $7,500 credit. So if you don't have the batteries for that, if you're really hoping this massive market, there's that. Maybe they feel like, so that is off the table, and then maybe the competition is pretty fierce elsewhere. I mean, it's just hard to make money in small EVs for anybody. So it's unclear. So maybe that means it's being pushed out. That's the thing we just don't know. So when you're looking at the growth prospects, people at one point thought maybe this would be coming in late 2025. Does it mean 2026, 2027, 2028? I don't know. And again, even then, it's not a slam dunk. Making money off of a small EV there's pretty low margin, and people don't have much patience. It's not a toy. If you're buying a small vehicle, it's not like people buying the $90,000 vehicle. You're probably buying it because you need to get to work. And if it goes out, you're in trouble. You don't have another car. You don't have everybody else, a garage full of vehicles. So that is just a tough market as well. But it could be years away. And so that's sort of it on the EV side. They don't really have much on the horizon. So they have a fairly thin pipeline in that regard.
And do you see any more evidence that would maybe support the bear case for Tesla stock?
Well, I think the bear case is that Tesla is having to cut prices, and they've had having to cut prices since the beginning of 2023. And that was even with the IRA credits last year, which are still there. And they're still having cut. The models aren't getting any younger. The Model 3 refresh didn't really change things around. The Cybertruck hasn't become a game changer yet. We'll see. I mean, it could, but the bear case would be like, this is not really, once you get enough, once it becomes no longer a head turner, people will go like, I think it looks ugly and I don't want it, and so that it never takes off. And then other, that other EVs just take it over. I mean, if you keep on selling the same product, and you can imagine if the iPhone had stopped at the iPhone 5, how do you think Apple would be doing now? I mean, people make that comparison, but Apple makes a new iPhone every year. It's upgrades and upgrades and new things. And so I think that would be the concern. And maybe people finally give up on the FSD. And so that would be something else. And there is that disconnect between that, because the fundamentals are so poor. I mean, earnings are falling. Sales are likely to be falling, at least in Q1. That's unusual. It's very richly valued for a company that's not growing. It's the kind of valuation you would see for a fast growing software maker or a fast growing Tesla from say 2020 or 2021. Those days are in the past.
Yeah, and can you talk a little bit more about that disconnect and maybe how it plays into what investors should be looking for when it comes to Tesla stock?
It makes it much more hard to judge because again, like the bulls are saying, we basically see massive opportunity, but there's actually no revenue. No, well, with FSD there is revenue, but they don't, like in terms of actual achieving those things. They haven't achieved those things yet. Now maybe they will, maybe they won't. And then the bears look at that and say, well, look, there's declining. It's been really weird. So while Tesla has fallen 30% or so, and it's been the worst or one of the worst performing stocks in the S&P 500, the stock hasn't actually gotten cheaper relative to forward looking earnings because the earnings estimates keep falling. And even some bullish analysts who are almost like discounting the EV business, they're saying, like, that keeps coming down. So that's a disconnect because the bulls are saying this should be a $3 trillion company, or will be once they prove the technology that they're working on. And bears are going, this should be priced more like GM, and that would suggest maybe like another 80% drop. I mean, so there's just a disconnect. It's not like Coca-Cola where a bull might say, I think it's going to grow 10% this year, and bear might say, maybe it grows 1% this year. I mean, it's just like, it's just that different level of win or lose. There's nowhere, it's not even close to being in the same room, the conversations between bulls and bears.
All right, Ed. Well, thank you so much for your insights today. We will definitely be keeping an eye on this one.